Stock of the day, a hard one not to miss today. Commonwealth Bank reporting a near 20% bump in cash profits to $8.65 billion with a record $6 billion share buyback being announced, $2 per share final dividend. The financial giant confirming it will continue to target a payout ratio of 70 to 80% of cash profits. This despite warning about ongoing pressure on earnings from lower interest rates, adding the pandemic will continue to have an impact on the economy, but stressed vaccinations as well as fiscal support will continue to be crucial. Investors lapping up the news with CBA shares hitting fresh record highs. Andrew Wielandt, what did you think of the result? And also Combank shares at the moment, of course, I'm catching up with Matt Common here on ausbiz live at 3:30 this afternoon to go through the results. Andrew, what do you think of it?
Yeah, not a bad result, Koshy. A little bit ahead of consensus. Certainly that off-market buyback is welcome, $6 billion. If you look at it in the context of the overall capital of CBA, though, it's about 3%, so it's certainly not huge, but you know the way they're structuring it, returning, I think it's about $2.1 billion in franking credits is certainly a good opportunity for those clients with self-managed super funds to be thinking about that, seek your own advice. But if in the context of the underlying result, it wasn't too bad, that dividend payout ratio of about 71%. So again, well below the pre-pandemic levels, but about $3.50 odd as a total dividend, $2 for this half. Obviously, you know, talking about impacts of lockdown, etc. Look, not a bad result. Would I pay $108 today? I'd be struggling, frankly. But overall, solid result and welcomed by the market and setting a good tenor for the rest of reporting season.
Why do you welcome a buyback?
How long have we got, Koshy? So look, there's a few things to think about. One of the things is basically that because they've sold all those businesses off recently, they've got all this excess capital. It's about 13% excess. Sorry, 13% Tier 1 capital. APRA says they need to hold 11. So they have this surplus capital. They don't know what to do with it. They're trying to deploy it. And so what they're saying is we can actually do better by selling off some shares, buying back some shares rather, buying back about 3% of the capital. So there are fewer shares on issue. Each remaining share will have a higher earnings per share and therefore by definition a better dividend as well. And then dependent upon what tax bracket you're in. So if you're in a high marginal rate of tax, well, getting extra income isn't so flash for you. But if you're a self-managed super fund in pension mode, as an example, and your taxable level is nil, then getting a monster fully franked dividend is actually attractive to you. So you've just got to look at your own circumstances.
Yeah, because you then get the franking credits, which were the source of the big debate in the last election, that you actually get a check from the government for those credits as well. Henry, what did you think of the result?
You can tell that Andrew is a financial advisor, whereas I'm just a good old-fashioned stockbroker. I just went, wow. It was just a wow, really, for me. The numbers are huge. It seemed only, a couple of years, well, it seems like a lifetime ago that we had the Hayne Royal Commission and the banks were all going to be under pressure and it was never going to be the same again and the whole landscape was changing. And here we are with Commonwealth Bank, all-time record high, the banking sector on fire, huge on-market buyback, massive amounts of capital, business going extraordinarily well. And yet here we are in Sydney and New South Wales, we have a complete lockdown for a long time to come. And the bank is obviously pretty confident. And I've got to say, just wow, it was a pretty stellar result. And I know that everyone says, oh, they only just beat forecasts. But let's face it, we've been ramping up forecasts for the last 6 months. So it's still a pretty stellar result, I've got to say. It's once again proved that it is the bank out of the pack. So I think it's a pretty good result. Shareholders should be pretty happy. I talked the other day on ausbiz with the boys from Equity Mates about the holy trinity of reporting season, which was increased dividends, special dividends and buybacks. Well, they got 2 out of 3 on that one. It was a pretty good result. So as Meatloaf once said, 2 out of 3 ain't bad. And I think it was a pretty good result. The market seems relatively happy with it. And given it's trading at an all-time high, there was plenty of opportunities there to take some profits. There's also a big short position in some of these banks as well, which I think will continue to push them a little bit higher. So yeah, I think just wow, basically.
Yeah. Would you be a buyer at these levels?
Would I be a buyer at these levels? I think there's probably better value maybe in the other three in terms of catch up. This is solid. This is a hold. There's no reason to sell it if you own it. But if you were coming to buying banks for the first time, then I've got to say I'd prefer to buy Macquarie, to be honest.
Right.
But you know, you've kind of missed the Commonwealth Bank boat. That ship's sailed if you're not already on it. If you're on it, no reason to get off at the departure or the port of departure.
Okay, so in the last week we've had Suncorp, really good, fabulous result. We've had Commonwealth Bank.
Yeah.
Does that mean we can expect ANZ, Westpac, NAB to shoot the lights out as well? Is this a sector re-rating, or is Commonwealth Bank just that, as a lot of people have been saying anyhow, the best of the big fours and the others won't keep up, Henry?
Well, I have this thing called the big bank basket, which is a really simple thing. And many years ago, I think back in the dim, distant past, about 8 years ago, you could buy all 4 banks for $100. It was $100 chuck. And now it's trading at 100 and, well, after today, I haven't added it up, probably about 191, 192. Now, the top of this was around $210. This is not taking into account any dividends. That was back in, I think it was March 2015, the golden halcyon days of banking profits. So, you know, this whole sector has been massively re-rated. It got down to $107 in the March madness that we saw last year with the pandemic. So it's had an extraordinary rise. We've already had ANZ and NABs both announcing on-market buybacks, which is slightly more conservative, I guess, than Commonwealth Bank, because an on-market buyback is when the company buys back the shares in the market, and there are certain rules about what they can pay and how quickly they can do it, etc. But they have got control of their own destiny. So if things start to go pear-shaped again and the custard hits the fan, then they can pull back the buyback and not be quite so aggressive. And equally, they can crank it up if they need to. So it does give them some flexibility. Commonwealth Bank just gone, you know what, guys, we got a ton of money. Let's give it out to you. We've got a ton of franking credits. Go for your life. And I think, you know, that's a pretty big sign of confidence for them. Will the banking sector continue to push higher? I think it will. I think we certainly are seeing that happen, and it will continue to happen. And it does drive our market. Here we are, 7,600 on the ASX 200. And yet here we are with continued COVID issues, to say the least. So it's an extraordinary performance. It just shows you the power of free money.
Record low interest rates. Long may it last. Yep.
All right. Low interest rates as far as the eye can see.